Breaking news. Bitcoin had rejected from this yellow line and plummeted into the dreaded red zone of the wave trend. This dreaded red zone is going to try to hold Bitcoin, but if it breaks, things could get pretty ugly. In today's video, we're going to discuss the facts and the charts, and I'm going to leave you with what you should be doing now based on the fact that we are back inside of this dreaded red zone for Bitcoin. Welcome. I'm Steve. Here, we deliver honest, sponsorship-free TA with genuine value. Subscribe for a no BS approach that actually helps you. Subscribe. Let's dig into it. We're on Bitcoin US dollar index and we are on the weekly chart. We have price action above and we have the wave trend down below. Let's dig into the wave trend. When you pull up the wave trend, you can go to your indicators tab, type in wave trend. When you pull it up, I'm going to show you my settings. They're right here and my styles are right here. What you're going to notice is I have a couple extra bells and whistles on this wave trend. Case in point, this yellow line, which is at about 80, and our white line, which is at about 24.6. Once you have this yellow line and the white line, you're going to have this chart look exactly like this. The wave trend is a little cheat code that we use in order to buy Bitcoin and sell Bitcoin at very strategic places. Take a look. Anytime we enter this green zone at the bottom of our wave trend, it's historically a monumental time to buy. Case in point, 2015, touching this green zone at the market bottom. Fast forward, 2019, market bottom at or below this green zone. 2019, at or below this green zone. Then the market bottom in 2022, at or below this green zone. So anytime Bitcoin gets at or below this green zone, historically, monumentally strategic time to buy. Case in point, when you get up here to this yellow zone, it's a great time to sell. So with the wave trend, you can easily have great times to sell and great times to buy. And this white line is our market structure. Simply put, when we're in a bull market, we usually hold this market structure or white line as support. And when we're in a bear market, we usually hold this white line as resistance. Case in point, 2015, holding this white line as resistance. 2012, holding this white line as resistance. Every single bear market, holding this white line as resistance, every single bull market holding this white line as support. There are two outliers in this, and that is what happened in 2019 and what recently happened in 2023. These are called double dips. It's essentially the market screaming at you to buy in the midst of a bull run, which was a fake out to the downside. In other words, we had the bottom of the market here. Again, at or below this green line, great time to buy. Then the market starts pumping. Then we start crashing back down to create our technical double bottom. In the midst of that, we broke this white line, which we're supposed to hold as support during a bull run. We were still in a bull run and we broke it. In other words, the market gave you a second opportunity to buy. Tilt your phone to the side and subscribe. It said, hey, we're in a bull market. Yes, we broke below here, but again, it's a phenomenal time to buy. We had one of those recently in 2023, which we covered right here on the channel. We dipped below this white line momentarily, and that was at the tail end of phase one of the bull. Again, I prepared you for phase one of the bull. I prepared you for the bottom of the market. I said phase one will go sideways for about 100 days, and it did. And then we dipped below here, and I said, hey, this is the market screaming for another opportunity to buy Bitcoin. By the way, that scream of the buy was at about 25,000. Again, very strategic times to buy. So that double dip happened, and then we've been holding this white line as support ever since. Right on schedule. So what we can see happening is you use this wave trend, you set it up like I did on the weekly scale, and you'll use this for the rest of the time that you're in crypto. It'll give you phenomenal times to buy, and it'll give you phenomenal times to sell, as well as strategic market structure. And when we break those, strategic double dip opportunities to buy again and add to your positions. But what you can see is that Bitcoin just dipped its head into this bloodbath zone, this red zone of the wave trend, which has this red zone right as we have this top lever here of about 54 and the bottom of about 51. What you can see is that there's a lot of structure that happens at this red zone. And what we're going to do is try to understand what part of the phase that we're in, right? We understand that we're in phase 3. This is the bottom of our market here. This is our move into phase 1. Then phase 1 moves sideways for about 100 days. Then we go into phase 2, move sideways for about 100 days. Then we went into phase 3 and move sideways for about 100 days. Right on schedule, Bitcoin is in phase 3, moving sideways in a very strategic manner. But we got rejected from this yellow line and a correction back into this red zone. So we have to ask ourselves, is this out of the ordinary? Is this a big warning sign like that 2-month candle? Right? That 2-month candle that just printed, which is a gravestone doji candle found at the top of a rally, thin body at the bottom, long upper wick, little to no lower wick. This is a gravestone doji candle, which represents a massive trend reversal. We also talked about the stochastic RSI on a much smaller time frame on the weekly, which is spelling some momentum potentially coming into the market in the coming weeks. We will have prices falling until we have a stochastic RSI cross. It's really that simple. So what we can see happening in our wave trend is that we had a rejection from this yellow line and into this zone here. So let's identify that solely, whether or not that's a normal move or a bigger warning sign. We're looking at it in terms of we moved into this top yellow zone at phase 3 of the bull. Let's identify when we moved into that zone before. Back in 2012, we moved into that zone the first time. This is the bottom of the market. This is phase 1. In phase 2, we touched that yellow line, but we got rejected and we went back into this red zone. 2015, the first time we got up to said yellow line was right here in also phase 2 of the market, and that was also rejected back through the red zone down to the white zone. 2019, we moved up to this yellow line for the first time in 2019. That was in phase 1. We got rejected. We crashed down into our double dip. Our most recent cycle, this is literally our first time up to this yellow zone, and that is in phase 3. I'm dropping a bonus video showing love to everyone who has my indicator bundle. Wednesday, May 15th, just watch your email. Wait to see what I have to say. Some big trades are lining up. So a rejection of the first time we enter this yellow zone is typical. The first time that we entered in 2012, rejection. First time we entered in 2015, rejection. First time we entered in 2019, rejection. So the first time we entered here in 2024, right on schedule, a rejection. So should we be overly concerned with a rejection at this yellow line? No, it's par for the course. It happens every single cycle like clockwork. So no, we should not be concerned. Should we be concerned about a move into the red territory after said rejection? Let's identify. 2012, move into this red zone after rejection. So pretty normal. It did not touch the white zone. 2015, move into this red zone after rejection, but it also moved to the white line. Okay, very noteworthy. 2019, it moved through the white line. It presented that double dip opportunity. Again, the market double bottomed. It hadn't double bottomed yet. Not a very healthy thing to do. It needed to double bottom, a very healthy thing to do. And after that, that's when we had our explosion, after we did that really healthy thing. Tilt your phone to the side and subscribe. Again, market structure is everything. So fast forward, we're in this situation now where we finally got above this red zone, right? We had held it as resistance in 2021. We held it as resistance again in May of 23, resistance again in July of 23, and then we finally broke through for the first time Christmas time last year. And we've been holding that red zone as support ever since Christmas time last year. So it's been a long time. We've had a very nice run holding support. So would it be overly concerning for us to break this red zone and crash down to the white? Well, let's look at it. Again, 2012, we did not do that. We came back to this white zone after our phase 3. This is phase 1, phase 2, and phase 3. Phase 3, we did come back down to this white zone. We came back to this white zone right here before phase 3, and we broke this white zone like we talked about in 2019. So really, to come back to this white zone would not be overly concerning at all. In fact, it's happened almost every cycle so far. So it would be out of the ordinary to break this white zone and to have another double dip, because we've only had one double dip in a cycle. We've never had two double dips in a cycle. So right now, with Bitcoin breaking this level in our wave trend, it's not overly concerning. Now, given that, what should you be doing right now? Number one, I want you to trade less. I want you to be much more level-headed. I don't want you to be like Grandma Betty and acting like your hair is on fire every single day in crypto. Money always moves from impatient hands to patient hands. This is a bull run. It's more risky to be out of Bitcoin than in Bitcoin. What you're going to want to do is watch the stochastic RSI cross on the weekly chart. And that's our only chance to null and void this ridiculously bearish candle that printed on a much higher time frame. Again, we're talking about a weekly stochastic RSI cross going against a 2-month gravestone doji candle. I mean, it's like David versus Goliath. The 2-month candle is so much more impactful than a weekly stochastic RSI cross, but that's what we have. That's the storyline right now. The stochastic RSI cross on the weekly will try to go to fight the 2-month gravestone doji candle. And that's the only thing that you should be watching right now. But again, should you be buying? Should you be selling? You shouldn't try to sell and then buy back when it goes lower. Everybody in the herd will do that. You don't want to do what they're doing. Instead, this is a bull run. You want to be strategically buying during a bull run. You want to minimize your risk. You want to maximize reward. That's what you want to focus on. I'll see you right back here in the next video. Peace and love to the fellow underdogs. This bull run is our road to 500,000 subscribers, but I need your help. Today, tell one person about our YouTube channel, how we spit facts, go against the herd, take no paid sponsorships of any kind. Road to 500,000, let's go.